We're going live. We're live. Okay. Hi, Arjun. Welcome to Venture with Grace today.
Thanks, Grace, for having me.
You are one of the most I feel like iconic person who have been in the both the crypto world and investing and building companies. So to give the audience a little bit of your background, your parents are immigrant, and then you were born and raised in Santa Clara, and uh, wait let me know if it's wrong or something. I know that you went to school
No,
in
no.
Maryland, but anyway, so basically I think you mentioned that when your parents were starting a company and then what they have went through, and then later on you joined the military, and later on you started two companies. They're both exit, and meanwhile you and then you joined social capital, and then you started tribe later on. And to give the audience a little bit of your background, do you want to share it with the audience on what are maybe one or two core memories that kind of or experiences that shaped into who you are today?
Yeah, I was born and raised here in the Valley, Silicon Valley, and my parents are both in the startup ecosystem. It's a good question on what had shaped anything. I'd say the single largest shaping, if I keep going back and reflecting, I always end up changing my answer, but if I'm trying to be true and honest, is just a constant exposure into startup ecosystem, companies that are being built, I think probably had an effect on me really early on. And I think it sort of creates this, it creates this sort of consistency of you don't fear it as much if you're thinking about starting something new or starting a project or taking some sort of risk, wherever that may be. Um, and so wherever the arc was from high school to joining the military to being a consultant with the military to starting businesses that were completely ridiculous that I won't go through, into coming back in the valley and working on consumer and software products that were ended up being very high engagement products. Those were so I don't think there was any sort of formative aspect to say this is sort of inflection. I think when I did come back though in 2008, sorry, that came before 2008, but when I was here and I had come back during 2008, 2009, that became very formative because there was this very early um, way in which community was developing in Silicon Valley. And I think a lot of people don't speak about it as much, which is you had all of these people that were losing their jobs. Some folks were leaving the valley because it was expensive, but there was a very small set of people in locations in the Bay Area, all of which have high notoriety today, that just came together for dinners, events, people's houses, garages, and I think that, in my opinion, that was probably the most formative, outside of being exposed to the ecosystem in how to think about building consumer products, consumer tech. And every company was a part of it, even in the smallest way. I remember Facebook engineers and managers were coming out and speaking, and when I say speaking, it wasn't like a formal event, right? It's just you were just spending time around a table and just working. And so those were, that's how I got my first job, my first co-founders. It's how I started working on my first projects. It was just being here, being around all of that. But all of the folks and communities that were being built were very specific around just trying to build products for what the future may look like. And that ended up being, web, social web, web 2.0, data 2.0, et cetera, et cetera.
I wonder, so at one point you mentioned in another podcast you had a 1.0 GPA in high school, and I wonder how do you at that point how do you figure out what's your unfair advantage later on? Because it sounds like studying wasn't necessarily your thing. I wonder how do you kind of figure out what's the right path for you?
Yeah, to take a step back, Tribe today is probably the best manifestation of all of myself and my team's deficiencies in some case. So, and what I mean by that is, what did we do really well? Is I would say that that's our competitive advantage as people. And then all the areas that we wanted to continue to compound and learn and understand is what we built. And frankly, that's also what product managers do when they build their products. is like, how do I understand my customers better? What are the deficiencies of what I may or may not know? And that's why you even look at analytics in the first place. It's not that I didn't want to study. I was just extremely not um, excited about studying those topics in that specific way. And I think the advent of the internet changed the way in which I consumed, built, learned, like everything. It just changed my life. So that that was more. I'd say that like that was what got me on the path to be able to consume any sort of framework or understanding or history or math, if you want to call it, in some cases. Um, and again, fast forward, take a step back. It's like, here are the companies that we created. Here's the incubations that we started. Here are the bets we were willing to take. That's that all comes from, as a years and years of sort of honing in, I'd say, not expertise, but being less afraid to do it. And again, it may seem quaint, but just the fact that the internet was around and you could sort of consume and educate yourself in a very different way makes you less interested in going to school. In fact, I look at my kids and the speed at which they learn today across all the devices, and they build their they're building their own games in Roblox, building their own servers in Roblox, just learning a very different facet of life. I don't know how I would go to school every day, right? It's just what you learn at school and how you interact is just very archaic to me.
I wonder, okay, so I have yeah, like I definitely resonate with you on like I feel like school is not the best way to like learn something. Um like how do you learn about venture? Cuz I like took some notes on like your past interviews. You wanted to be the biggest badass investor out there and and then also like you guys currently build a platform that's data driven uh like do you want to talk about like Termina and you call it like analyst on steroids. Like, what does that mean? And then like, can you walk us through like how you kind of like build Tribe Capital from the fundamental thinking to like how you kind of execute on your vision?
Sure. So Tribe Capital today, what do we do? Um, so we set ourselves up to a a build on our platform, but in order to get there, we sort of focus in very specific ways. So today, if I think about Tribe Capital 3.0 and the way in which the team is set up, is roughly about 2 billion in AUM across all of our assets, mostly venture. We um, we have invested in companies that are all sort of pretty well known. So from Carta to Apollo to Docker to Kraken on the venture side. On the crypto side, we've invested in multiple protocols, incubated multiple protocols. And I think the piece that's really important is kind of how you get to the state of the platform rather than thinking about, hey, we have this firm and we have this AUM. It was more that in order to build out our platform, what we really cared about was making sure that we had a framework or a point of view on the world to be able to make good investment decisions or great investment decisions over time. Um, have a unique point of view where we could incubate or build across any stage of a company. And I kind of walk through that. So what we're best known for, obviously, is that we make investments, we take minority positions, and then the data-driven part. I think um, we've always struggled to articulate this, and I always try to re-articulate it, so it always sounds a little different. Is that we're not data-driven. We're much more data informed in that we have a unique point of view by leveraging all the data that we have, that we collect, that we look at, and that comes from our deep rooted history of understanding product market fit across multiple companies that we've worked at and how our team has worked in this ecosystem. So an example is when Facebook was really early on building out their consumer products, you have to have a way in which to understand consumer engagement, and you have to build out data and infrastructure in order to do that. And you need a very fast feedback loop to take all that information and then make decisions with it. And then, like, that's the primordial version of how it started. But we did that across Yahoo, myself and my team as executives. We did that for Alibaba. We did it for Snapchat, for Square, for Slack eventually, for multiple companies where we were literally in the um, in the war of building out all this data infrastructure and then building out how we thought about how product managers, in many cases, them being us, make those decisions. And so if you take a look at the world of venture or private equity at the time when all of this was happening, it's not like they were adopting and building software infrastructure. Most software was being built for new products and ideally cost savings depending on the type of company you were at. And so when you think about how venture capitalists, even today, I would argue, they just they're assessing through like who they know, some sort of FOMO or an understanding of what they think the world could look like. And then they make that investment thesis case really early. And over time, they use, it's not like you have 100% of understanding, qualitative and quantitative diligence. It's not like over time they move over to more scientific approach to understanding the company, that they keep that like 80, 90% of like understanding the humans around the table. Because you interview anyone, they'll say, we think about the team, we think about the product, we think about the market, but then they'll keep focusing on team, which I think is really important. But having a very deep-rooted understanding of how the product is architected, where all the data is stored, how is the data interpreted? Can you align with the company around what is actually happening with their raw transactions to where they're going to go in the future and project it more accurately? So we built Tribe. We got a lot of data from companies. That data helped us inform our point of view and make our investments. We got good at it. We're always going to strive to be great at it. And all of that R&D and all of the work we put into building out Tribe's edge, if you want to call it, the next edge we believed was actually taking all of that data, contributing it back to companies, private equity firms, venture capital firms, to be able to give them a platform to be able to do something the same, or if not better, because it's a separate company, we spun it out, and that gives you the ability to actually perform at a much higher level with your point of view, but leveraging the data that you have in your interpretation. But at the same time, depending on who you are, you're either opting in and giving data to the rest of the community, or you're opting in with a different set of network effects with what you're able to build. And so then we actually provide more clarity to single companies, even if we don't invest into them. The reports get stronger. We end up with a larger and larger panel data set so that we can be more helpful even then separately than as a customer of Termina being Tribe, of what we want to be able to do and where we want to spend our time as alpha generation. And our whole goal was that we have one fund at any given time for one strategy. And we wanted to be focused and very concentrated with the partners that we have around the table. So we didn't need to boil the ocean and say like we need 500 projects and 500 products or financial products. We wanted to say like, look, we're going to abstract all the things that we want to do and make sure that we can perform very, very well in anything that our team decides to put their time into. And so again, Termina ended up being an incubation. We spun it out and it's doing very well. Tons of customers across all of these small to medium mid-market, even public companies now, but private equity, venture capital, venture debt, all over the world. And I think what's really humbling on that side is that we had a unique point of view at Tribe. And you meet like literally now thousands of new firms worldwide that I didn't even know existed, but perform very well in some cases. And I think our goal is, okay, wow, look at how much we've now also learned from an ecosystem that we didn't even know existed in so many parts of the world. And how do you bring that back and sort of think about building products? But at the same time, then Tribe continues to evolve and focuses on finding ways in which it can partner and benefit from it. So that was the reason for that. But we've always had this history of trying and creating new products that can benefit our point of view in the world and continue to evolve that. And sometimes that have manifested into different ecosystems. So fintech banking in Mexico, we helped incubate a company there that scaled up. We've done 2 or 3 in crypto around liquidity, stable coins, perpetuals, making sure we can, again, partner with anyone in the world in order to be able to have them benefit from it, our experience. And sometimes that means us starting the company from scratch. Sometimes it means us coming in and like combining a company that we may have started from scratch, plus seeing something that could have used the benefit of our software and product and expertise. It's all dependent, but it comes from the root of just really, really understanding and quantifying product market fit across an end of thousands of companies that we've seen.
Um, for the audience who never seen Termina, like, because it's, it was like early on this month, you guys announced it on like pension investments. And I wonder, like, I guess, like, what does it look like? And I know that, like, there basically it helps the capital allocators to like track how companies are performing. I wonder, yeah, like, can you give us a overview on like what does it look like, and what are some like key things that like makes this product successful? And what does this mean for like fund managers, especially like, let's say, emerging fund managers and emerging LPs?
Sure. So to take a step back, one of the major issues is um, when you are an allocator
Mhm.
and you want to get insights into a company, some of the things that people would say is that I want to see their dashboard. Problem with seeing someone's dashboard is like that's their view of the world. And while that may have some operating metrics and KPIs around how they perform, you have your own view of the world around how you want, a SaaS company to work, or a marketplace company to work, or a credit card payments rails or crypto company to work. And or now a new machine learning and AI company to work. And so your metrics keep evolving of what you think because in my opinion, you don't actually have a framework. So our goal was that our tool actually isn't for just us as allocators. It is a tool that can be used and has been used because we built it at large, high scaling companies like Facebook and Uber and Square. We said, okay, what is it that you use in order to make operational decisions, strategic decisions, and what do you look at? And there's forms of that dashboard that you can use that if you have raw data that you can continue to take a look at and see a snapshot in time or look at cohorts over time to be able to see every heuristic that is really important, and then measure that against not just one company but multiple companies and benchmark yourself. And I think that's the real key piece is if you can benchmark yourself against anything, can you get better at making decisions? And so I don't actually believe that a capital allocator should be looking at a company any differently than the way in which a company looks at it. And so the product has been built for that in mind. Because if you are a product manager working at your own company and you looked at this report, it gives you a very good understanding of the fidelity of how your company works. If you are an analyst looking at this report for a company to invest in its equity, it gives you a very good understanding of how to benchmark that company. If you are giving a venture debt or a loan to the company, regardless of what kind of loan it is, you have a really good understanding of the fidelity of that company. But you should be looking at a standard set of metrics and a really good understanding that the semantics are all the same, going all the way and tying that also to financials. So when I say raw data and understanding and having a report, that's what becomes really important. And so when you can reduce that gap of knowledge between what a company does and how it understands its world, and the allocator, I actually think that like that's actually the big sort of aha wow moment is now the allocator can start thinking in the same way, and vice versa. A CEO or the management team can start thinking about what investors or capital markets think as well. And that's always been the gap, right? Which is like, if I report this, how will the street take it? If I do this, how will the investors take it? Well, it doesn't matter if you're all speaking the same language. It's just really easier to understand and communicate what's really important to build a business from a product and from the early stages of what the idea was. Right? There's a roadmap that can be built around how you want to build your company. And then you can decide if you want to be a compounding company that grows at a certain percentage but has a momentum, then you can find investors that want that type of risk exposure, or that you want to be much more high velocity, take more of a risk towards how you think about allocating your capital. That's a different set of investors, but you can still all measure the same thing and underwrite.
Mm. Um, like, basically, you also mentioned about, like, people work at companies, like a product manager at some company can also like benchmark their performance using this tool, right?
Mhm.
Is this like gonna be open to the public market, or like is this product more like a pitch book or something you need like a mega amount of money for subscription? Well, it's not mega for you, but like for like a general public, if I'm working somewhere, like, from just like a regular tech company or like a startup or something, it could be like a pricey purchase. I wonder, like, what does this product sits on the product spectrum in like, basically like as a like, is this going to be sold as like a very expensive product to the few people in the world, or like is this like going to be like regular people also have some sort of access to?
So uh, the strategy has been so far to make sure we control our own destiny. Is let's sell to the folks that we know this has the most immediate impact to. So you can think of it as late stage companies, some mid stage companies,
Mhm.
larger enterprise public companies, where this report has immediate action and understanding of how they're performing, right? And lots of companies at a certain stage pay for those types of tools. And so then you continue to move down the stack. And I think um, when you have a good understanding of what that company needs, and you can sort of move down to, okay, what are the modules and pieces that may or may not work for a mid-stage startup or an early-stage startup or an early-stage fund or capital allocator. Is the way we're approaching the market is we'll have the most premium product with pricing first, and we'll continue to move down the stack to see what's the most relevant for folks. We don't have a large um, we don't have a sales team at all, and we're only focused on product engineering. And what we want to be able to do is, hey, we want to build the best product for the customers. If they don't use it, we don't want to charge for it. We want to make sure that they use it, um, and they can vote with their time, right? And that's kind of how we think about the way in which the product is being built, and make sure that there's mass multiple engagement across not just a few people, but I want to be able to have a whole firm take it over. And so we actually have whole companies that have reoriented around this system, this architecture. We've started building out APIs so that they can use and sort of customize themselves. We have whole firms and funds now being created just from scratch to be able to just adopt around this central way in which to think, which is great because now I'm reducing the friction around how to think about the value proposition. So I think this will evolve. Our goal is to control our own destiny. So that means premium pricing in the beginning. Then we'll move down as we think about distribution and engagement getting larger and larger. It's not that I don't want more proliferated. I do. It's that I believe that we can proliferate this product even further by making sure that we can continue to evolve the product in the enterprise. And the reason why we make that case, because it's harder for other companies to do it, is they have got these growth targets. So while we're growing very fast now, if we slow down, that's okay because we're not planning on adding reps or quota carrying capacity salespeople. The only thing we care about is that we have a customer. We're able to get back to them within 20 minutes of them analyzing the company at the very least, to 24 hours, and at the very latest. And so, and they're able to get very, very deep insights of a company that just met today. And we're going to continue to reduce that as well. So there are a lot of cool things. I'm sure we'll post things over the next couple of weeks and couple of months. But getting a large amount of data to be able to understand each company at its core, and letting a company discover and evolve itself without having so many people involved as middlemen, I think it's like one of our core missions. And we always say the word like, how can we make sure we just expose as much truth that exists at the company as possible, and what are those products that we want to build? So we really hone in on truth because that doesn't lie. It's like this is exactly how you're performing and how this will most likely continue to perform in the future. And the more we can build around that, the more we can make sure that we have our enterprise customers first, but then we move down the stack will work out well. And by the way, when I say enterprise, typically what you're thinking is it's going to take them 3 or 4 years to get to maybe even like a mid-market customer, but we have them already. We're already testing with them. We're trying to find out ways in which we can reduce that gap and and build up for as many consumers as possible. But it'll take some time, but we're having a lot of fun.
Where does the data come from? If it's like, just curious.
Yeah, so the original contribution to the data came from all of the companies that we've met over the last 25 years. The second and third and fourth contributions to data are coming from our customers. There are customers that have their own system, so they don't share. It's theirs. It's their product. It's their experience, and they have their own benchmark because they already have thousands of companies, so they get to sort of benchmark themselves. But for a lot, we have seed funds that come in and they opt in and say, look, I only need to really use this tool 9 or 10 times a year for my follow-on or pro ratas. And so I really want to understand if I'm making the right decision or not. There are a set of customers that says I'm going to contribute data, and I'm also going to be a part of the network. You have a bunch of those types of firms, and then you have other emerging managers or people outside the United States that are doing the same. Private equity guys, actually, you would think are higher frequency customers. They aren't, but they are very high frequency customers in terms of the companies. They're very high frequency customers of the same company. They will run these reports again and again and again and again to get a really, really good deep understanding of how to think about every aspect of their business in the company. So, like I said, the data is relevant for depending on who the customer is, and a lot of it they actually have in their own firm or company, and they just didn't know it. And so a lot of it is like, how do we just alleviate that pain so that they are able to gain much more insights around understanding who they are, what they look like today, what they need to improve, and benchmark themselves against the rest of the ecosystem.
Um, like, why do you think this company has the best potential? Why I'm asking is because I feel like this is the only company you put like a description on your LinkedIn. The rest of the company, maybe you're like co-founder of 3 other things. I feel like they're all coming from your fund, right? Like they all are kind of incubated in your fund. And why this company is like the company that you kind of like did so much things from. I feel like you probably highlight them the most.
I I I think the Termina is more of a manifestation of like our work's life. So it's easier to talk through it. We've always built it at a company. We've started it from scratch. We built up the infrastructure. We did this for obviously getting Tribe up and running. So I think it's just a part of our DNA. But that's why it's so easy to talk about it, because we spun it out of what made Tribe successful in the first place, and then we've incentivized the team to build new products and incentives for their customers so that you can always continue to build that. But I mean, I spend more time with like my portfolio than I do building out this product, because this product has already been built for us. It's more about now we're putting the finishing touches. So the first 80 to 90% were built over the last 15 years. Now the next 10% is what we're really building off of, which is the nuances of how to make sure we can tune it for the customer. But yeah, I think that it's funny the description of my LinkedIn. I think it's more that what do you want to highlight at any given time, and I think this is again a really good manifestation of how I spend my time, how I spend my time with my portfolio of companies that I work with, how the firm spends its time. When we incubate a new company, what do we use in order to get them to a successful place? What do we do for a company before they go public? That could be in India, it could be in Indonesia, it could be Latin America. And our companies have done very, very well. And the systems that they used in order to get them to this place were the early versions of this product. And so the reason I talk about it so much is it's infused with so many things that we do. If we incubate, we've got a roadmap, and we have a large benchmark roadmap around how to think about executing. If we invest in a company minority position, we've got a benchmark around how to think about it and how to partner with that company, how to underwrite the risk of where they are at any given time. If we partner slash private equity style combine a bunch of things together, we've got a very, very good roadmap around how to do that too. And that again all comes from our funds in our firm in some cases, and it benefits all of the capital that we deploy. But it's just a different way of how we think about spending our time. And Termina, which is now the name of it, is the center of that. Has always been our data quant side and our R&D side.
Mm. Okay, so I have a kind of like one question, and then there's 3 sub question underneath this. So if you're an emerging manager today without the Facebook and like previously like the basically head of growth at like Yahoo experience with or like growing a company or something. Let's say you're an emerging manager and your past background is like working at a tech company somewhere, and you're trying to build a tribe capital today. Um, how do you differentiate yourself in sourcing, selecting, and winning?
Sure. So the basics of venture capital, which every LP or capital allocator looks through, is do you have the ability to source and find companies? So can we trust you to do that? Do you have an edge to be able to do that? Do people even want to talk to you? Then are you good at evaluating or picking? And then can you win that deal? Right, which is something that a lot of people think through because of allocation constraints or capacity. which something that other people don't think about, and I spend a lot of time trying to educate, is then portfolio management and risk management, which is these companies are staying private longer, they're getting bigger, and at a larger scale. The
Mhm.
path to, if you hit 100 million in revenue, it's like a big deal. I have companies hitting 100 million in revenue, so you have to start to think about all of the portfolio and risk management to your portfolio and what may or may not be able to be disrupted depending on your timeline and how long you're holding that investment. Um, we've got a particular point of view. You've heard it from me for a while now, or at least over the last 30 minutes. And when I think about the managers that are out there, I think it just depends on your asset class and where you're deploying it, and how do you think about your portfolio and risk management around the capital that you're deploying. Right. So early stage, you are constrained by fund size, the amount of capital that you can deploy into the early phases of a company. By mid stage is different, by late stage is different. So it's hard to say. I think I've always kind of told people, how do you do what you do better? Build around that, whatever it might be. And if you're like the master of sourcing and networking and finding companies and connecting with people, you should build your systems around that. Um, we weren't, so we said, okay, great. We got natural sourcing because we were around, we had a brand. But how do you augment that through different systems and data we can build? And so our approach to data wasn't scouring the internet with LinkedIn, or GitHub and trying to understand what was happening in certain
Mhm.
networks. It was basically, look, you got to do the regular blocking and tackling, which is we show up, we're there, we help build companies. In some cases, we incubate them from scratch. That builds a brand, and credibility, which is like we are founders at the same time. We have a unique point of view. The artifact and the reports that we provide for free, in some cases through Tribe, is our own value proposition, where that proliferates even further. And so founders see what that work looks like, how they want to partner with us, how Tribe thinks about partnering in the first place. So we see a ton of inbound that way. But it just changes. And so we built our brand today, so we're fairly lucky. So we have a different issue today, which is we have a signal to noise ratio, which is we just get a lot of companies coming in per year. We have to figure out where to spend our time. It's a
Mhm.
triage issue.
Mhm.
Whereas in the past, when we first started, we said, like, look at what we do, and what we did is and I still think of it this way. We just kind of stayed as humble as possible and said, look, we're starting out. We've got a unique value prop, and we went to every single VC we could find, West Coast, East Coast, and we pitched at a Monday partner meeting and said, this is what we do at Tribe. It's the same way we would, you would pitch a new company. And we were
Mhm.
lucky enough to be able to do that at a lot of the tier one firms, to say, this is what we do. We're Switzerland. We want to make sure that we can help augment, and work with you. And in some cases, we may or may not compete with you depending on the stage and strategy, but this is what we do. What are the companies that you think we should work with or spend time with? And that's actually how we started our firm. So it was different, in that we went out and said, who do you think we should work with that would benefit the most from our approach? And to be frank, that is actually the largest manifestation of our portfolio comes from those partners, from those LPs. Obviously going to the YC events and all of the accelerator events that are out there, by just building the relationships early. But it was a
Mhm.
good understanding of what we do, and people kind of came to us naturally over time. We had to be patient because we just kept proving it out. So for all of the emerging managers out there, or even for yourself, it's like, what do you do really well to gain insights, build that relationship, build on it, compound on it, and then be patient.
Um, but like, how does that? Well, like, first of all, thank you so much for sharing. And like, I definitely feel like, it's really interesting that you would like be able to like pitch to other funds in their like partnership meeting, like, or like just Monday meetings in general, and like asking them, where you could add value. I think that's a great strategy. But, you know, I wonder like, how do you, so after you get yourself like in front of a lot of like companies, how do you kind of like select and win? And also like, how do you like kind of like spend your time at this point? Because I'm sure like if it's like quote unquote free help, like I'm sure like a lot of companies will just come to you. And how do you
Mhm.
quickly figure out what is like a Docker, what is like a Carta or something like early on? And um how do you build like a repetitive pipeline for yourself? Because I think uh if you go into like a partner meeting, first of all, like I think getting into the door like requires a lot of like social capital per se, like not not referring to like, your past company, but
Sure.
like it's about like, you have to kind of like have build credibilities in front of like the top funds to get into the door. Like number one is like how do you get into the door, and then number two is um like how do you build like a repetitive pipeline, because at the beginning, yeah, you could show up and like see what you got, but like how does that become a system for you to do that repetitively, and all that.
Yeah. So there's a bunch of questions there. So I'll try to answer and articulate pieces of it. So yes, you're right. In order to go to any of the firms um, across the board, they need to give you their time, right? So the Monday partner pitch meeting. And I was being facetious there, which is like we did that a lot of the times. But most of these firms, they need something at any given time, right? Someone's thinking about AI, someone's thinking about machine learning, someone's thinking about fintech. There's always someone at the partnership that has something that they're thinking about that you can help them with. And our goal was like, hey, you're a partner that's doing X. Let me show you how we think about this. And then the more I think it's anytime you can provide any sort of insight that they're going to be, especially if they can help their career more than anything else, they're gonna spend time with you. And our whole goal was like, look, we're trying to build relationships and value propositions and a unique point of view from that we have from us, but it's for everyone. It's not just um, what it's not just for us. And I think, to be frank, we were just relentless. We would say like, we are going and meeting with other firms. Do you want to meet with us too? Here are the reasons why. Here's a report. Here's how we sort of think about it. And we just kept doing it. So I think part of it is you have a bottoms up sales process for anything you do, and you just have to block and tackle. And I don't think it's a superpower in any capacity. I think it's something that you have to do. So myself and my partners did it. Yes, we had some social capital, but the amount of people that said these ideas that you have are crazy was more like 80%, and then slowly became 60, 50, 40, 30 over time. So it's not that we stopped. Even today, if a firm says, Arjun, can you come in and talk to us about how you built the firm and how you and understood the data, how you built that practice out, we do it. We don't hide anything. It's more, here's what we do. Here's how we started our process. Here's how we select. Here's how we think through triaging. It's not a secret, and the reason why that's the case is that our trade secret has been our products and our system, not the output. And so we do want to share the output and how we got there, and that's never been something for us. That said, we do focus our time and attention. We try to keep our heads down and make sure we do the work, but that doesn't mean you have to be secretive. We just want to make sure that we stay focused. And I think these firms that we worked with recognize that we came from that background. We helped in some case build their companies over the last 20 years. Right? It's not like we came up with an idea in 6 months. It's that we had built, as you had mentioned, some social capital. But you would be surprised how much of that social capital isn't relevant 6 months down the line, because just like founders that had sold their companies for a couple hundred million or a couple billion in some cases over the last 10 years, you don't hear from them again. You forget who they are, and you become less relevant to founders, become less relevant to venture capitalists at early, mid, and late stage, because they're in the workflow of understanding what the world is looking like at any given day. And to be able to catch up to that is a lot of hard work. And so while we may have had a very small head start in social capital, we have to be able to make sure that we continue to capitalize on that and making sure that we were part of that flow of understanding and building value, no matter who it was to. It could be the CEO of a large Fortune 500 company, it could be a venture capitalist that wanted to understand our system, wanted to partner with us, have us around on the board at some case, in some place, help them think about the company in a different way so that they could articulate it to their CEOs, even if we weren't on the board. It's just doing everything possible to make sure we were valuable. But then we just built systems to make that easier and easier and easier to do, so that we could continue to build that value.
You also have invested in like a lot of seed funds, and I wonder what are the common theme between like this. I'm just looking at like your 6-page PDF of the Tribe Capital tier sheet, and there's like so many fonts there. What are like the common theme between these fonts, and then what do you think are like the biggest mistake like most fonts make?
There, look, I think manager selection is very hard. I don't envy LPs when they're looking at us or anyone. And so, part of it is we're building long-term relationships, and we want to help enable people to be successful. And we did that as angel investors into founders. And I think we didn't want to change that. And so sometimes it was our own capital, sometimes it's much more strategic. But our whole goal is to be transparent, which I think is funny because a lot of people think like they don't know anything about Tribe. Like we literally post everything we do on our website. Like you could
Everything. Yeah, yeah, yeah.
everything
It's everything.
everything we
I'm like,
do is
yeah, I'm
there.
very,
Um,
yeah.
and and so the tear sheet that you see is the it's a selection of our companies based on, and I think we'll continue to evolve this based on their market cap, no matter how it goes up and down. Obviously their enterprise value, but it's also a way to build relationships, right? If I'm transparent with all the things that we do, then we'll be able to continue to see more and more relationships. So what's funny is the people that understand our website the most are actually founders and emerging managers. They're like, oh, that's
Mhm.
how I think about the world. Can we talk through it and what can we build together? And then we build relationships. Sometimes we're investing personally in them, and so we disclose that. Sometimes it's a strategic investment, so we disclose that. Sometimes they don't work out, so we disclose that. If a company fails, we disclose that. So a lot of it is like, here's what we're doing, how we're thinking, where we're concentrating our time in our portfolio across the board. And then we can use that as our artifact to figure out how do we want to partner. And here's all of our tools and services that we can use. So the emerging managers that are there were at the time, ways in which we could learn from people, but at the same time they could learn from us and help them, stand up their businesses. And I think emerging managers are like early stage startups. They have a high
Mhm.
attrition rate. Most will fail. I did. It's not Tribe's not like my first version of trying to start a firm. I've tried 12, 13 different variations of it, different names, different entities, to try to get to where we are today. So I think part of it is helping prop those people that we think are also special or we want to have in our orbit. And there's not many of them, but when they come, then you want to find ways in which you can continue to partner.
Um, like, what's your thought on, you mentioned like you have maybe failed like 12 times before this. What were some core learnings there? And then like also when you're raising funding from LPs, maybe at that point you're like financially very sad after you sell companies and all that. Like maybe you don't have to race to just like I don't know when you are talking about like building the various version of Tribe that maybe doesn't involve other people's money, but I wonder how do you see if a first fund like doesn't succeed or like doesn't show some like kind of traction or like maybe just in a bad market or whatever, if let's say would you give them money for like their second or third fund, and how do you view like failures um in the thing? And then like what's your cutoff line on like, this is it. Like I'm not gonna invest in blah 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 anymore. Like how do you view the risk part of things?
I think you said something key, which is failure. I think if someone thinks of it as a failure and they're moving on to the next thing, then you're obviously not going to partner with them on what they were doing previously. But if there are nuances to it, which is here's the postmortem, here's what I learned. There were unsuccessful attempts. From those unsuccessful attempts, I decided to do X, Y, and Z. And I think that's really important is how do you think about what worked, what didn't, and how do you evolve and build around it? If you decide to go start a company, great. I want to find ways in which we can continue to build that relationship wherever that might be. Um, and so there's lots of people that I've seen that have started funds that then started companies, very successful companies, and vice versa. And I think a lot of it is making sure you're just paying attention and getting the context to understand where they are in that journey and what they're trying to do, and what they are very passionate about, and then what's the platform that they use in order to build that. I think anyone that was trying to get into venture, or frankly, I don't think emerging managers, that fad, or like wanting to be a founder and that fad is any different. It's more, some people wanted to build companies to be called a founder. And I think some people wanted to invest into companies, they didn't care about the companies, to be called an investor. And that maybe that was driven by social status. So I think like teasing out those nuances are really important, which is when the going gets tough, do they still want to do it? when their companies are going through lots of turmoil, are they around the table to help the companies, regardless of your point of view, regardless of your track record? Are you still in the trenches working with them and helping them? I think that's what matters. And so we grew up that way. Those are my principles and the people around the table that we really care about. If you don't have those principles, you're not for Tribe. But I don't think those principles should be any different for the partners and the emerging managers that we work with. And so we will also think the same way, which is like, hey, they're not really thinking long duration. When I say long duration, I'm not even thinking that long, right? 3, 5, 10 years out is a good way to sort of think about the time horizon.
Do you think the best investors are gonna be people coming from an industry? Let's say, if you are in your like 20s or like early 30s, like how would you go about pursuing a career and then build like a really strong mode for yourself? So for example, would you join, let's say now, if you think AI is the biggest trend, would you join like an AI startup just for the sake of like building, like just like be in the inner circle of a particular sector so that one day you could be like the best investor in like AI companies in a particular subsector? Or would you say like being a great investor doesn't require you to immerse yourself with a specific sector, but you just have to be really analytical and like have strong sales like skill to like to just like close LP, close like deals in general?
Yeah, when you use the word investor, you're investing capital, and so the stage at which you invest is really important. And understanding the asset at that stage and how to underwrite is really important. So I think like just the basics of what a business does and um, and how that gets built and grows is important. So and that comes from so many different places. I think that the challenge is that venture investing is very different than passive mid-stage and growth stage investing, which is different than public investing, which is different than hedge fund or private equity. And I don't. I've seen so many great investors come from so many different backgrounds. I don't think there is a way to say like this investor needs to have some sort of operating experience. Like some of the best investors around my team have come from zero operating experience, but they really truly understand like the business and the product very, very well. And
Mhm.
they're my core partners, like who have built out some of this infrastructure with me. And my success has come from their success, and vice versa. Um, and I come from a founder, entrepreneur, and then eventually working at big companies and helping scale big companies. Great. That doesn't mean I'm a good investor. It just means that I was there at the time seeing something, and maybe there's some pattern. Who knows? I always go back and reflect if I learned anything from there. And it's hard to sort of understand because now we have so many portfolios and we're continually learning every day. Um, the the I think like venture investing is just it is art and skill and science. You have to combine everything and understand. And now more than ever, which I think is different, is like now you have to understand capital markets in a different way because you're just in the company for a longer period of time. So I've never prescribed anyone to go a certain route because it may not be interesting for them, and they may not actually learn or glean a lot of insight into how they're going to be um, long term. It's more everyone's path is different, and if it leads you to investing, that's great. But I wouldn't join a company to be. I'm going to be at this company for 2 years, and I'm going to join a firm. I just think it's like a really bad way to think, and so you should just follow the path of what I would say. Like, how do you do what you do better? And if that's to start a company, that's great. If that means ride a rocket ship of a company that's doing really well and make sure you can learn everything that you can from the folks that you work with, you should do that. If it means you should go and work at Google for the next like 15 years of your life, and do that really well, you should go do that. So I think joining anything with a pace of mediocrity is not something that you should do. You shouldn't regress to the mean. You should just go do the best that you can do, find the right role, and then continue to perform no matter where it might be. And it might not be the single best company in the world, but if it's in like the top 50, I think you're generally on the right directional track, and that could be anywhere, right? It's not. I know a lot of people went to China, or now a lot of people are talking about India. I think at its core, it's like where do you want to spend your time? Who do you want to spend that time with? what do you want to learn, and how do you do that really, really well? I think that's the key, because if you can't do it well, you won't be passionate, and that'll show over time. And no matter what you do, if if you regress to the mean for that, you'll never be a good investor unless you're really passionate, and then you might have to start from scratch anyways.
Um, I really like that. I feel like you have to find some sort of like alignment with your inner self on like what, makes you um continuously passionate about something. You're on the board of many companies, and what were some key things that like basically insights that you've seen among all the company that you're on a board of?
Uh, Every company is different, so the nuances are very hard to reflect on. Look, I think the my favorite companies and the people around the table, this is not just the founder and it's the management team as well. They were
Mhm.
just they have always just been good at being decisive. It may be a bad decision or a great decision, but they were very consistent, which is, here's how we think about what we're building. Here's what we want to continue to build. Obviously, you have some variances in how they execute, but when the going gets tough, how did they respond to it? I think those. I learned so much from our own portfolio and how they think about building that I wouldn't trade that for anything in the world. And I think you just learn over time what, and this is the art piece, right? This is not something that we quantitatively measure. That I don't think you can. Is how do the teams just rapidly learn and iterate to make sure that they can be just much more decisive over time? And that is a very hard skill to learn. It's a very hard skill to teach and apprentice and build your team around. So when you see it and when they have it, it's great to watch, because that's when they're firing in all cylinders and they have momentum.
Um, how I guess like after you've like so I guess like what do you think throughout your career, what were things that you've done very right to make you become like very successful today? So like, I feel like I've never seen someone with are on this many like board that are with like really interesting companies and then running like billion-dollar funds and then use them like not old. So I don't really know how to say not old in like a better way, but like in general, I feel like you have accomplished a lot in a short amount of time. I wonder what do you think are like the big things that you've done right?
I think re-articulating what you just said, I don't think we consider ourselves successful by any means. I think we are always trying to find out ways in which what we have done, how can we continue to do it better? So we built our own internal data quant system, but how do we build software to make that better? How do we build software to make our founders perform better? How do we spin that out to change parts of the industry? That'll continue to evolve. When we incubate a company, great. One of our first incubations is soon to be a multi-billion-dollar protocol. Okay, well, how do we make things bigger, better, faster, cheaper? Um, when we articulate a new way and point of view around how we think about the world, how do we do that better? So I don't, there have been different ways to say this for other people, where the Jeff Bezos way, which I think it's always day one. I do think like those mean a lot, which is we like I don't wake up in the morning thinking this is what we've done. I wake up in the morning uh, excited about starting the grind all over again. Like that's fun, right? Like a company going from 0 to 1 is exciting. A company going from 5 to 100 million revenue is exciting. A company that's building out a lot of consumer engagement products is exciting. So I think you have to be not bored of continuing to try to partner with people at that stage, continuing to innovate and start from scratch, even if you've created something of value in the past, and being okay with failing, and frankly being excited about it. Like I love, if you saw my desk, there's just doodles and doodles of papers of ideas that I'm thinking about all the time, mostly stupid. They don't make any sense and they're very inarticulate, but I'm thinking about it. And so I think a part of it is, if you have a passion for that, and that's what gets you up in the morning, that's what gets you excited, then you should just continue to do that.
Totally. You also mentioned about like you are like, there should be more capital putting towards like moonshot bets into like hard problems and like frontiers technologies. And I wonder, what are things that you're excited about? And what's your overall thought on the current AI landscape? What are something that excites you?
Look, there's different. So I'll start with the AI piece. Um, large pots of new data, proprietary data is exciting to understand how they interpret it, how to learn from it, how to have action on top of it. And there's multiple people talking about it, so I won't go into deep, try to be insightful there. I think most of it is kind of self-explanatory, but understanding how that's going to affect and build good products and businesses is where I step in, which is like, what are the systems and architecture I can use to deliver a better experience for consumers, right? Technology and software is inherently deflationary. That's awesome. Like it's like that is exciting to see what that's going to do in Latin America, in Africa, in India, different pockets of it. What that's going to do in rural United States, right? So we get really excited about just making sure that we continue to understand, learn, and figure out where we need to spend our time, concentrate our time. The frontier, I think frontier is like this really weird catchphrase for a lot of money going into capex. So it could be semiconductor, it could be a space launch company, it could be a nuclear power company. Some people call it American exceptionalism. I think all of those words are basically to invest capital into things that are much harder than just building traditional software and having a sales team sell bottoms up. So we've always allocated a certain portion of our time, our expertise, and it's usually come from where we've come from if we've had some expertise there. So we've invested in a company called Saildrone. We've invested in SpaceX. We've invested in a company called Relativity Space, Kepler. We had incubated, in our previous firm, a company called Swarm that sold into SpaceX, which is called Starlink. We had two nuclear power companies, one called Zeno Power Systems and one called Radiant Nuclear. I think a lot of it, those actually all seem disparate, but they're not, which is we believe that you need to be able to launch a payload into space. So there's companies that provide that. We believe that the payloads into space, majority of it is going to be for comms and communications, space to space and space to ground and back. And we believe in order to be able to do that really well and have an abundance of capability, you need to have power. And so we invested in power. We believe if you take everything I said for space and you say the world's oceans, you can literally permeate that all the way through, which is like, what are all the companies that are going to be able to achieve that? And so that's kind of how we think about it. We say we want to be a part of every meaningful company that is building around that stack. And that's what we've done, which basically means that we don't actually invest that much into the ecosystem in terms of number of companies, but the quantum of capital with our LPs. Because we have two lines of business. One is we raise venture funds and crypto funds, and those are very specific, size oriented, typically 300 to 400 for venture, 50 to 100 for crypto. And then we have these SPVs or single managed accounts in some cases for our LPs where we're literally deploying on their behalf. Either we're making the case or they're making the case to work with us to get into some companies. And our thesis has been around that, which is 80 to 90% of what we deploy is going to be early, mid-stage, tech-enabled and software companies. We've got our edge, we've got our process, we've got our team that does that. And then maybe 10 to 20% might go in terms of quantum of capital, might go into very specific companies. And yeah, we're excited about that because, again, these are products that are inherently using technology in hardware and software, and everything applies. Crypto applies, machine learning and AI apply, traditional software applies. None of that is off the table because you're building products that are cheaper, better, faster. And I'm sure we'll get into other areas over time, but we want to spend our time where we think we have the most expertise. And then again, I always use this word, where we can concentrate our time. And being able to sort of build that value back to all of our portfolio.
I don't know how long you have. I am trying to keeping things under like the time control, but like anyway. So I wonder, do you have time for like one more question?
Sure.
What do you think it's like an undervalued sector right now?
I think you look at we have this in Termina. We have something called the weather report, and it measures flow of capital going into the private markets. And so in venture specifically, there was a glut of capital that went into certain sectors. That's one point it was healthcare, one point it was fintech. What's really interesting is that you see people retreat very quickly because they think it's done, it's over. And same with crypto. So 2 years ago, we spent a lot of time in crypto and fintech. We incubated, we built, and we invested. Now we're reaping those rewards. And where I spend my time again is back to the basics, which is developer tools, healthcare, and again anything that's generalist or vertically integrated software for agriculture. There's just going back to the basics of where software is proliferating, which industries that's happening in, which sectors and regions, and where we can leverage our edge and our expertise. And the short answer is I'm excited about everything what software touches, but it's anything that has high distribution and engagement, even if it's a free software product, we tend to pay a lot of attention to because that we feel is like the first disruption of what can happen. And we have a company called Silo that does this for produce workers all the way to for farm agriculture to distribution to warehouses to grocery stores. It's a free product that they monetize through financial services. We have another one in India that does something very similar, but for a different part of the sector across trucking. I think financial products and financial tech, fintech, crypto has been an area that we've been spending a lot of time in, not to speculate, especially in crypto, but to understand where those rails are very applicable to new companies. Then what you do is you take all that back. You say, how does that apply to our existing companies that are focused on settlement or financial service or fintech, and what can we do to help them? And so, even when I think about Carta and what they do on the tender side, is like they do a ton of settlement, but there's a certain amount of cogs that they spend in order to do it. But that is so de minimis when you think about it from crypto rails or cross-border payments. So how do you bridge the gap for our companies to understand what's working and what's not? And so I'd say, like, look, I'm always excited about large distribution and engagement products, and today, fintech is one of them.
Amazing. I have a 1 minute fire round for you. What's your favorite book?
So I've been reading. So I would actually say that, look, this is probably a proverbial one that everyone sort of talks about. Is I think Peter Thiel's 0 to 1 is like very good. I don't read it as like I read it once and I thought it was amazing. I read that book 2 to 3 times a year, again and again. And the reason I do it is that it helps me personally build a framework based off of all of the experience I've had over the last 3 to 6 months. It helps me re-articulate. There's Howard Marks, Mastering Market Cycles, that gives you more long duration understanding. Those are those types of books and those nuances. And then there's the books that Chris Dixon just wrote. Elon Gill has written stuff. I think I think what people don't appreciate about some of these books is not to read it once, tweet that they read it and it's done. Read it again and again and again and again at different inflection points through the year. It doesn't take that long, and you glean different insights based on your experiences, and that's what I tend to do. So I try to read maybe it's not a lot actually, 2 to 3 new books per year, and then the rest of the 10, 12 are the same books again and again.
Who made the biggest impact in your career?
I think probably my father. My dad made the biggest impact watching him, build startups, failing multiple times, going into multiple industries from gigabit switch, Ethernet to cybersecurity to ultrasound to real estate. Like, he just went into so many different places, but then doing it all really well. I think had the biggest impact, which is he just started from scratch, even when he was older. That was very cool to see. And then I've seen other people do the same thing. But that's also just an easy answer to say, like, hey, your father. Yeah, I would say that my co-founders from the first major company where we raised institutional capital at it's called Laughing Out Loud apps, so Lolapps. Those people are the ones I've ended up continuing to work with, not because like it's convenient. It's just that I saw them evolve and continue to build things at a really high velocity, have a very fast clip in learning and rapid iteration. So I tend to try to stay within the realm of folks that I've worked with and see how they've evolved for the better or for the worse, and see how I can just continue to learn from them. And so, yeah, I think the biggest impact has been, if I was to count, it's been 50 to 75 people at any given time that I've worked with, and I learn more from the people I work with or work with me or work for me than the other way around. And I think that's always been my personal goal. Just continue to watch them and learn from them.
Who would you invite to your dinner party?
I don't have many dinner parties, but when I do host, which I do a lot of, it's all the founders that I work with. It's all the people that I work with. That's always been the case. So they could be friends of the firm that we work with. It could be other board members. It could be other companies. I just and companies that have failed. If when someone says I'm shutting down my company, I will always reach out to them and say, let's spend some time. I think the amount that you can learn from unsuccessful attempts is what we call it is just much more deep than hey, I'm killing it, and I've gone from this X to Y. I spend more time with the companies that have been unsuccessful than I do with my companies that are successful.
Where can we find you outside of work?
So I travel obviously for work, for my companies, for the companies that I'm building as well. Um, I'm at any given day, I'm with a member of one of my teams. There isn't a day that goes by. Even on a vacation day, it's probably because I'm there. Maybe a couple hours of vacation here and there. So you wouldn't see me anywhere outside of work. The other place I'm going to be is with my kids and my family. That's the only other place, and they're typically with me at the company, so it's synonymous.
Oh, it's bring your kids to work every day lifestyle.
As much
Fine.
as much as I can. If I travel a board meeting, they are here during my team meetings. They're always around, and I think what's important is like I want to continue to give my kids the same exposure I got, but on steroids.
That's amazing. Honestly, I would love to be your kids, but like, but anyway, I feel like that's a great training like program for the kids. But anyway, thank you so much, Arjun, for coming on the show today.
Great, thanks for having me.